Good morning. How is everybody? Hopefully warming up.
Good
It
morning.
is here. We're in the 50s again today.
Good morning, everybody.
Good morning, Willie.
We're at 37 at 7:30 in the morning. That's pretty freaking warm here for that early.
That's true.
We
Good
are
morning.
62 and cloudy. Chance
We'll
of
be
rain
we're going to
tomorrow.
be in the 70s on Friday, which is really outrageous considering that's the last day of February, I believe. Well, one of the last days. Yeah, close to last day. Huh.
High
Well,
33 in Chicago today.
That's good. You're
well,
above freezing.
Yes,
in,
sir.
Ju-
Yep.
in July, we're going to be in the 90s and 100% humidity. Beat that.
I like that. Actually,
You
I don't
just
mind humidity.
you just
We get
continue
that
to
here too.
you sweat through your shower. I mean, have you ever sweat in the shower?
Yeah, I used to live in
Welcome to the
Houston.
South.
Houston HOU is for humidity in Houston. So
That's
it
right.
got so it got so humid it rained every afternoon because it was just thick humidity, but they called it rain. So anyway, all right. Well, let's get rolling here.
Big day today.
Oh yeah, this
Hmm.
is the end day. This is NVIDIA day. So it'll be interesting, And um, yesterday, we were up 370 in the Dow. We were down, 800 the day before, so we're not quite back. Nasdaq 236, S&P up 52, advancers 64% versus 31 decliners. Uh, Stocks greater than the 50-day moving average is at 46.5%, so still below that 50. And below the 200, we just went up a little bit above 50%. So still, they got that market breadth kind of right in the middle. Uh, Yesterday, AMD entered to provide Meta GPUs for their AI build out. So AMD went up a little, and Anthropic announced partnerships with several software companies, including um, CRM, FactSet, and DocuSign. Uh, uh, it kind of brought back some of those software companies, but we'll look at the charts. They didn't bring them back
They
very
they
much.
actually struck one with LPL, which is a major independent broker dealer.
Right. Yep.
I found
Yep.
that out yesterday as well.
But I looked at the charts and we'll look at them, and it moved them up a little, but still not to the point that we're ready to get back in. But we've been watching those software stocks, thinking it might be bottoming, and we'll take it out. Again, like Trent said, all eyes are on NVIDIA earnings. Expected $1.53 earnings per share versus 89 cents in the last year's Q4. Revenue is supposed to be 65.8 billion versus 39.3 from the last quarter. Remember, depending on how that happens, and everything I've been reading is like, man, they got to either hit these or blow it out of the park or have expectations, to keep this going. And when you look at it, we talk about Nvidia 7% of the S&P and it's 14% of the Nasdaq 100. So the way that goes will sway either way. And we've been watching those charts on those wedges and things. We'll see this could be the day that moves it one way or the other. And just remember, after earnings, as we always see, it goes one way or the other. It's after hours. A lot of things are triggered. People chase. Let it settle down a little bit and see where it actually ends up. Before you chase it, you get rug pulled potentially. Workday was down 10%. They see first quarter subscription revenue coming out lower than forecast. Uh, Salesforce and Snowflake earnings are today. What else we got? And I think that's it from what I got on that. We've got a little bit up on, third of point up on Dow, third of point on S&P, and about the same on NASDAQ. So we're just kind of waiting around. Gold up, okay, 5,200. Silver's up, so we got some of that rolling. Crypto up, okay, look at that. We were down to like 63, between 62 and 63. Based on, they said tariffs. I don't think that was it, but there's just variation. So we're back up above our magic 65 number, so that's good. Ether still below the 2,000, but moving up a little bit. Solana, Dogecoin, bonds up a little on the 10-year. The boons, the Japanese also, and then take a look at oil here. Oil's up a tad bit. Uh, the State of the Union last night didn't really move the markets and anything. Nothing really major came out from that. One thing I was going to look at is J.P. Morgan here. He was talking about their AI plan, and they have, how they're going to move into that, and they use OpenAI and Anthropic. and some of his talk down here is he was talking about they were talking about people in headcount. He says the headcount's really unchanged right now at 318,000. But let's see, where was it? Someone asked him about, are we going to see massive unemployment? And he said, beyond huge redeployment plans for his bank, he expressed concern with the rapid adoption of AI could put entire professions out of work. He says, as a thought experiment, what if autonomous trucks were introduced overnight? He asked, what would you do if you had to put 2 million people on the street? I'm assuming he's talking about truck drivers. That next job is $25,000 a year, stocking shelves. Business and governments need to begin planning for this risk now with ideas including assistance and training for displaced workers. Society's got to think through what it wants to do if this becomes that kind of problem. Now's the time to start thinking about it. He's been kind of ringing the bell on that for a while. Thought that was interesting. He was talking the other day about that. So anyway.
It's Mark, that sort of emphasizes a conversation I had with my old business partner yesterday. And she made the comment, she says, my biggest fear is AI because of the rapid growth of robo advice. And even her broker dealer offers it. So it's almost competition within, the parent company. I honestly think that is a threat to the whole financial industry, a big way. So.
Well, banking, financial, everything. I mean, we saw it the last couple of weeks. Insurance got hit, software got hit. Everything has been hit. And Trent and I were talking before we got on it. I'm at the tail end of my runway's getting shorter, but we're talking about his daughter and his friends, and it's a different way of looking at life. If I had the opportunities when I was younger, I worked hard, worked through the corporate ranks of lots of corporations, moved around the country wherever I needed to move. Now you don't have to do that because now with all these tools at your hand, you can be your own CEO, your own CFO, your own HR department, and you can control, all kinds of products and things by yourself. Now it's amazing, and I think that's where enterprising people who might get displaced, and maybe older people like myself can't do it, but the younger generation, I think they understand what's coming. My thoughts.
I agree.
Okay. Yeah. Okay. Let's take a look here. Move this up to the heat map. This was the S&P yesterday. You see lots of green yesterday. We had red the day before. And again, we'll look at the heat maps. Financials were still kind of red. Healthcare was still kind of red. With medical devices, green throughout. Consumer defensive. Some of the things we've been seeing movement in, and even the technology sector. Kind of with the announcements from Meta and AMD and different things out there, and Anthropic, and kind of making up with the software people. And you can see software was up a little bit. We'll look at those charts too. But did it make a difference on the charts? We'll take a look. Again, here's your S&P. We're waiting. Today may be the day that we decide a direction one way or the other. You see the S&P is outside of its uptrending wedge. We're still right here, right on the 50, above the 200 on the S&P. And again, 7% of the movement of the S&P is usually dependent on NVIDIA. We've come up, we've hit the top up here, and ever since then we've kind of rounded off a little bit as we see, institutional been selling, retail's been buying, hitting right here, and we'll see what happens today. Today is going to be an interesting day. This may be the one that generates whether we go up or whether we go down. Here's Dow Jones again. We talked about this. This is a long-term wedge, and Dow has been solid, and then fell down 2 days ago, and it tried to get back up yesterday and didn't quite get back up across that top. We'll see today. We did get above the 50 a little bit, but we had a full candle now, closed down below this long-term support. You look at the MACD has fallen apart a little bit along with the RSI. Again, we'll wait through today and see what happens after NVIDIA. Here's your NASDAQ. And again, NVIDIA is about 14% of the movement of NASDAQ. And you see we've come back down, get a little closer. We've broken through this level of long-term support, come down. We're still fighting this level right here of support. Haven't come down past that. If we do get a drop, again, it would come down, pretty much to the 200. But everything's just kind of waiting for today, and even here on the NASDAQ. Here's NVIDIA. Okay. NVIDIA's, hanging in there. It has a lot of fans, a lot of people looking at what, and having hope that this is going to be what happens, and it drives it up. We're right on, the long-term support and resistance level. We've been playing around it for a while. I went back and I just looked at earnings. Here was the last earnings on November, and you see we had this. We opened up after earnings way high, and then we ended up down, and then we ended up down, and then sideways, and then down. You go back to the earnings prior to that. Okay, did not have that. We had a buildup, kind of like we had a little bit of a buildup here, and then earnings came out and down. We went down below the 50, and then we had to work our way back up. So the last two earnings, you've seen it, come down after earnings. And again, this was a big candle that was going to take off. This is what I don't want you to get sucked into a rug pull like this. So that's why I say just let it settle down and figure out, and they always return to the mean at some point, and then you can figure out where the price action is and what direction it's going to go. Then you can either write it up if it's good news and fantastic news, and we can move this up and go long, or when it goes down and you can go short if that's what you wish to do. Apple has done very well. I mean, it stayed within its long-term support level, stayed above the 9, came down, hit, and then moved back up, heading back up to its next level of resistance that we've hit several times, just above the what is that, 280 mark. But again, some resistance at that level. But Apple, again, not as exposed to the AI spend as some of these other mags. Amazon, still, after its earnings dropped, now we're in this zone here. We filled this gap. We're still in that gap zone, moving back and forth, but moved up a little bit yesterday. But the oscillators aren't quite where we want them on Amazon. Here's a little bit closer look. You see right on support. This is our swing trading indices where we've got all the oscillators, we got all the moving averages. We've been for 3 days right above the 9, but sideways. And again, I think we're just kind of waiting to see what happens today. But again, we're right on support, and these are the kind of things we like to look for to set up potential swing trades. And would I swing trade this today with NVIDIA out there? No, because I don't know which direction it's going to go, and it'll probably take these guys with them one way or the other. And that's what this chart's telling me. We're right on a decision point on the MACD. It hasn't crossed yet. Same thing on stochastic, but it's going to go one way or the other probably today after close. Google, same kind of thing. Google came down. We've played underneath this level of support and resistance, and right now we came up, hit the 15, back down to that level again. Here's your swing trade chart. Google again, kind of looks like NVIDIA. We've just been playing along this intermediate resistance level, and we can't get past. Again, the chart looks just like what we just looked at, just waiting to see what happens, and we'll see which way it goes today. Meta's come back down inside its wedge, okay, playing back in after earnings. Popped it up on earnings. Some people might have said, chase this up, and if they got in this price range, you're certainly in the red right now. So again, don't get rug pulled. Don't be too in a hurry to chase or miss out, because the market will even out and let you have an opportunity to get in. Meta again looks a lot like Google and some of the others right along resistance. We are under the 200 on Meta. Again, we don't have a. You would thought we might have popped a little more yesterday, just because of the deal that they struck with AMD, but it didn't pop up all that much. Here's Microsoft. Again, I have to go to the longer chart because we've been fighting this level of resistance and support over here. Support all the way, came down and hit it at support. We went underneath, had a better day yesterday. Here's our swing trade chart though, and you can see we're right on support, where we're seeing a lot of these mags right now on support on a swing trade chart, and not the trend chart. But again, just kind of waiting for today, and you can see how the MACD is flat and the stochastic's flat and our RSI is flat. Just kind of waiting, for today, I think. And we'll see which way it goes, one way or the other. Today is going to be a good day to make decisions by tomorrow. Tesla come down below our long-term support level. Again, haven't been able to get back up. You look at the trend, it's still down and to the right, getting pretty close to the 200, which is our next level of support on Tesla. Here's your swing trade chart. Again, at least on Tesla, we're above the 200. And again, but we're under the 9, heading sideways with Bollinger Bands converging. Palantir, Same type of thing on Palantir. We had this drop, earnings came back up, tried to make a run, back down right on this level of support. You can see we had support and resistance back here. If we drop down, we're probably going to head down, to maybe the 100 level right in here. I'd see this double top right here be the next level if we drop down again. Look at this 200 is now rolling to the negative side. Here's the 50 is going to have a death cross over Palantir, a company that a lot of people like, do good things. Their valuation is very high when you look at the PE for who that matters to. Here's your swing trade chart. So this is a little more positive again, it looks like a lot of our Mag 7 type stocks rolling right along intermediate support right under that 200. Again, oscillators flat, waiting for something to happen. And that something could be today. So a lot of stuff. Tomorrow will be a lot more interesting day than today looking at these charts. It'll be interesting how they all open or close tonight. Netflix, again, Netflix broke this line of pretty good support. We've hit, and then we went down under, and we come down to this next level of support. If we drop below that, you can see the channel, we're rolling right down the middle of the channel. Our next level, if it keeps going down, is about $69 and some change right here. So Netflix, ever since they had that split, has not been running very well. We've been watching to see if we can get this, potentially into a swing trade. And here we are, down, right on support, but we just can't get that momentum back up. So we'll be watching to see if that does, and potential swing trade there. But again, waiting for today. KMB, well, we finally got, this was potential swing trade from 2 weeks ago. When this is our trend line, we kept hitting this trend line. Well, we closed above it yesterday, so that's a good sign. Now I want to see today, give it a day and see if it comes back down, retest and heads up. If it does, that'd be an opportunity for an entry. For me personally, knowing what's going to happen with NVIDIA and how that's going to roll the market, I'm not in any hurry to enter a swing trade position today. But, we'll watch this. It comes down, tags off that, the next level of resistance around 116, right where we saw this pivot on the bottom here. So we look at the swing trade chart itself. You don't see those. Here's where that top was. We broke it through it. Again, we want to see it come back down. This chart looks pretty good, but again, I want to see it on the trend chart go back and hit. We look at some of the sectors we've been looking at. This is healthcare. Healthcare, again, we've been talking for the last 2 weeks. We've just been topped out on these resistance levels. And here we are again, in support, resistance, again, concentration up on resistance. Here's Lilly, again, Lilly sideways right along the resistance. Here's your 50 flying sideways. You got your 20 flying sideways. Got your 9 flying sideways. And again, waiting for something to happen. Here's J&J, 1, 2, 3, 4, 5, 6, 7 days hitting this resistance level. Now, that's why on swing trades, I like to get out on that because I don't know what's going to happen. And again, you see this 9 rolling up. And if it starts rolling over, like we see here on the gauges, here's your MACD rolling over. Potentially, probability-wise, you might see that price come down a little bit. Energy, we watched energy. Nice swing up, 1, 2, 3, 4, 5, 6, 7, 8 days trying to get past this resistance level. Here's your 9 rolling up. In the probability with the rolling over of the MACD, that it probably would go down unless there's some kind of unknown market condition, which could be, what happens between the United States and Iran, and if the Strait of Hormuz gets shut down or refineries get hit or whatever, will make the price of oil definitely more volatile. ExxonMobil, you can see what happened to ExxonMobil. Here we are. Look at that 9 starting to roll down. Look at the oscillator starting to roll down on ExxonMobil. CVX number 2 in the ETF, same thing. Devon Energy, got the 9 rolling up. We were up, earnings sideways, and now you're seeing it roll down. You're seeing the oscillators roll down. So just different, be careful on these. They can pop up. We get that news and have some war over in the Middle East. These could all pop up. If not, if everything peaceful, it happens peacefully, we'll probably see these roll down probability. Here's ConocoPhillips too, another one of the big major oil companies. Looks the same. Here's XLU. We've been following, utilities, and wow, what a run up that's been. And had a nice big candle day yesterday, but right on resistance again. So look at that. Here's NE. This is the largest in the XLU. a nice candle day, but right up to resistance again. You're going to need a catalyst to move these past. Nvidia doesn't do as well, and you see the market go down. We might see more money flowing into utilities because utilities are seen as safer. You got the dividends, but then you got to start looking at valuations of both energy and utilities and see what those PEs are. If they get too outrageously high, they're overvalued for what kind of company they are. Definitely we're not. Utilities aren't considered growth companies, and if your PE gets way higher than a micron, you might want to keep that in the back of your mind when you're trying to chase some of these up. Here's Southern Company, another utility. Again, earnings came out just playing right along that level of resistance. Duke Energy, the same thing. We're just seeing it hit. Not anywhere I'd want to chase right now unless it had a breakout and a retest and then move on up, but it hasn't done that, at least in the last 6 days. Here's your consumer staples. Again, we've had a nice run up. We talked about it yesterday and all week. Last week, the rotation into these different defensive stocks. And then we've talked about, sometimes they just hit the wall, and that's where we are. Just like everything is just pointing to today, and we'll see if this breaks it all, loose. And I think it will, one way or the other.
If we go back into Jensen Yang.
Yeah, I mean, if we go back into if technology becomes, the money flows, where's it going to flow from? It's going to flow out of utility, it's going to flow out of energy, flow out of staples, and back into the higher risk. So that's what we're up against today. That's why I'm in no hurry to chase or do anything. Let the market come back to you and let the charts tell you a little bit. And that's it makes it so much easier for me. I don't have to think all that much. I look at what's doing, keep my emotions out of it, and let the charts tell me which way the market's rolling. Here's, consumer staples.
Interesting you bring up about energy. Last night, the State of the Union, he signed an executive order that they need to, meaning the data centers, need to build their own power plants to power their data centers and not pull from the normal grid. So that's an interesting twist into the construction of these data centers and how much longer it's going to take them to build them, because you don't build the power source, in a couple of years. Right.
And are they going to be coal fired? Are they going to be natural gas? Are they going to be nuclear? Yeah. There's a lot. You're right, Bob.
So that's a big question when it comes to data centers now. And I would expect, is what I've been saying, is these things are going to get delayed, and then environmental, the whole list is going to go on. As if they want to put nuclear in, that goes on for years before they get the approval. So it's just a lot of questions in reference to that. But sorry to interrupt you.
No, that was perfectly fine and very valid in what you're saying. Next, Procter & Gamble had a nice roll up the other day, and then we wicked. Okay, candle of indecision, kind of a topping tail. You see these, and you're like, okay, is that the top of this? And we're going to head back down. We'll see. And today maybe Nvidia, hits it out of the park. Everything goes back to technology, and we start seeing these guys money pulling out back into the growth. Here's Pepsi. Okay, I didn't know. I was looking at the NASDAQ 100. Pepsi's in the NASDAQ 100. That just amazed me. Of all companies. But anyway, they're hitting the skids. Here's Philip Morris hitting the skids right now. You can see the 9 rolling up right next to resistance. We look at communication services, again, sideways, again, backward, sideways. Another sector that we're talking about that's hitting the top. Here's your consumer discretionary. Starting to roll up a little bit and then back down. And here we are bouncing between the 200 and resistance, and we're underneath that. We can't get past that 9 again. So industrials, 1, 2, 3, 4, 5, 6, 7, 8 days following sideways on this intermediate resistance level. Look at that 9 flattening. We'll see if that does its traditional rolling back down. We had a good run on industrials. Not saying it's over, but we haven't in 8, 9 days been able to move it. And today may be the day that, depending on what happens, if Nvidia, gives us a turd. Money might move out of technology and back into these defensives. So we're kind of right, in a neutral territory like Switzerland, just waiting for something to happen. And then we can make a decision. I've been saying that for the last couple of weeks. Here's General Electric. Okay, 3 days right on resistance in General Electric. Number one in utilities. Number two, Caterpillar. 1, 2, 3, 4, 5, 6, 7, 8 days right on resistance, and right above it is sell orders. And again, here's that 9 rolling up. Now, I'm not saying it can't go further up, but again, today's going to be a big day on which way money flows, whether it's going to stay where it's at defensively, or it's going to roll back into techs and software and all that. Here's your materials sector. Same thing. We rolled out into materials as we're waiting for this AI build out. 1, 2, 3, 4, 5, 6, 7, 8, 9 days on resistance or up to sell orders. Again, I'm just showing what the charts are telling me. Why would I chase any of this right now when I know what's going to happen this afternoon? I'll wait for the market to settle down. Hopefully, we'll get a decision one way or another on the indices and on the sectors on where money's going to flow, and then we'll get back to a more regular market. But right now, again, I'm sitting at neutral, waiting to see which direction this market's going to go. Here's real estate, nice run up, right on resistance. Again, sector after sector after sector. We go to the software. Everyone yesterday, oh, software's up. Yeah, look what happened. Well, it's not really up that much. Here's your ETF, IGB. It came down and hit support. It started out at support, moved up a little bit. We're still in this downward pattern. Still, the oscillators look terrible. Okay, so we will watch this, but for me to get back into this, I'm going to need that 9 to roll back up. I need these oscillators to start rolling back up. And if that happens, that's going to be a good swing trade. It's not there yet. We said it yesterday, said it the day before. Microsoft, same thing. We went up yesterday, but we're still hovering right here on this intermediate support level, 9. I mean, these charts all look the same. The trends. Here's your Salesforce. I think they have, is it today's their earnings? Yeah, I believe so. Right up to the 9. Here's where your sell orders are. You can see there's a big level of support and resistance right where these sell orders are. So they're seeing the same thing we are. Again, CRM into it, same kind of thing. Here's App11. App11's been bouncing off support. Still got to wait for that 9 and these momentum to roll back up. We might get a swing. Not yet. Not yet. Here's Palo Alto Networks. Palo Alto still hasn't even hit support yet. It's still rolling down. After their earnings, we had this gap down. Tried to move back up a couple of days ago. It just didn't. No momentum. CrowdStrike, big dump here, right on support. Again, candle of indecision. We'll see. Look at these oscillators down. So not everything is rosy and software, and we're not ready to say, okay, we've hit bottom yet, but it's giving us indications that it might. Here's now, ServiceNow, right along the bottom. Okay, try to make a run up. And again, I'd wait, but if it does turn, we do have a possibility of a swing, just not yet. And here's Take-Two Interactive Software. Same kind of thing. We had a nice candle up, got above the 9. This isn't enough for me to say, yeah, let's go in on this yet. I want to see a little more momentum. Down here, we're only at 42 on the RSI. Here's just on a trend chart. You can see what happened here. You go back. You see on this trend back in this area with a level of resistance and support, and then we came down, hit it again, and then we came down, we bounced off it again. So I'm trying to use trend charts along with my swing trading metrics to determine if we've actually seen a turnaround, and this is one I'm going to watch. Is Take-Two, not there yet. This was FTS. This was one of those that supposedly turned around yesterday in software because of Anthropic and what they said, but it did turn around a little bit, but right to where the sell orders are. So it really didn't get past resistance, even though the headlines say, "Oh, look at FTS." What happened to FTS? We'll watch it. Here's XLF. This is your financials, okay, and your banks down to support level and bounce back a little bit just inside the Bollinger Band. But again, nothing that I'm too happy about in financials yet. We look at the trend lines in financials. Here's Bank of New York Mellon. You can see the long-term trend line. It's broke, came back up, retested, and broke again. That's not a good sign on financials. JP Morgan. JP Morgan's come up. We've talked about head and shoulders patterns, and that's what it looks like. If it breaks down further, we could go down to, what is that, 260 potentially on this chart pattern, right down to this level here where we've seen support and resistance before on this head and shoulders. We're not there yet. But again, Not good for me because this was my pick for the year with JP Morgan. But again, the year's not over. JP Morgan is going to go into AI and all that stuff. But again, you're seeing financials getting hit. Goldman Sachs, again, flirting with this line of their long-term support. It got under it, and we'll see if it can get back above it. And Goldman Sachs and Morgan Stanley broke through its channel too on the bottom side. So again, I'm not seeing much in financials right now, especially big banks. Here's your semiconductors. Again, had a big day yesterday. All semis went up, but where did it go up to? Right to where we hit resistance again. Okay, so I'm looking at the long-term trends. Taiwan semi, it's been rolling up. No resistance above it. No sell orders even. Is this where I want to get in? No, because it's all-time highs. I don't know where the bottoms are. Probably could come back to this level here. I don't know. Technically speaking, that's why I wouldn't jump in there and chase. Here's Broadcom sideways. Here's ASML. Okay, again, rolling up. You got sell orders right above it. And again, sideways, but a little bit of a roll up. So that's good news. And maybe today the video will pop this thing up too. Micron, lots of time right here on the sideways move and waiting to see what's going to happen today. Okay. And then here's your XLK. This is your technology sector, and we've been flat for a long time, kind of moving right along this resistance, and we're down under it. We don't want to get under that 200, on technology. A couple of those in there. NVIDIA we looked at. Here's your NVIDIA chart. Again, from a swing trade, we've been since July in this sideways pattern. We're up on the top, ready to decide. Here's your resistance. Here's your sell orders. Whether we're going to go up or we're going to head down, and we'll probably know that today. Right now we're seeing them buy in. We're seeing them buy into earnings, and the last two earnings, as I showed you, we actually came down. So we'll just be careful and see what happens. And then AMD, AMD had a big day. They signed with Meta, but where did it go? Right up to resistance. So we wicked over it and came back down. So again, resistance and support is really the name of the game when we're talking about technical analysis, and it's pretty easy to see, and you just got to work it into your trading plan. Let me show you one more thing here, and I'll get off. Okay, and I'll go back to Bitcoin, because Bitcoin had this little scare. Okay, we've been watching this box. Okay, and we broke down below it, and I said, well, if we get in here, we could head down to 55,000, but again, get a little closer here on Bitcoin, and we saw a little relief rally, and we popped back up above it, just right on that level of support. We went down yesterday, we came back up, closed above it, and today we're above it again. Look at these Bollinger Bands, are really narrow, so we're in this consolidation phase. So a little bit of a crossover in stochastic. We're still above on the MACD. Good signs, but we'll see if we can get above that 9 and see if we can get some momentum. Now, again, we talked about this bull flag pattern. And bull flag pattern, if it came out to the way bull flags are, we could be back up to the 80,000 before we'd hit some resistance, and then probably head back down a little bit. But we don't know yet. But we'll know later today. So anyway, Trent, sorry about that. But the charts just tell us patience right now. To me,
I want to hear.
Can I? I'm sorry, Trent.
Go ahead.
I just want to hit a couple of things, because I'm going to jump into some meetings and I'm not going to be able to stay the whole meeting. But I think we missed something. We missed space. And Trent, if you have time, I know you're busy, can you look into that sector? I think we missed a big jump in space stocks. And lastly, I think Boeing is aligning itself to go up. So I just wanted to put those couple of things out there, but space is going to be big.
Frontier. Yeah, you think about the aerospace. What is it? Bear with me here. I'll show you.
It's like a dozen stocks, right? I believe that have doubled. Some have tripled. And there's a lot of money behind it. So just something to look into.
Well, back in December, when I introduced this core satellite portfolio, I put in U.S. aerospace and defense ETF as part of the core. That was December 16th. It's up 16.91% since then. you can look at what else has done well here. Energy sector up 25, 19 on gold, but everything else is sort of lagging. But you're right. I think you've got a good point there that
But you have to
there's so much.
separate that.
What's that?
You have to separate it from defense. It's a separate category now.
Sure, I understand, but to your point, I do think you're seeing more the exploration of more possibilities in space, especially with SpaceX and Elon's, wanting to put data centers into space and everything. When you think about what he's trying to do with because of energy, because of cooling, all of that, it makes a lot of sense. You just got to get it there, you know. And so I think you're right.
Yeah,
and especially China's trying to do the same thing, you know. So.
He's trying to put people up on, up in space in the next 10 years.
Yeah.
So that's what I've been reading. So, and there's a whole list of stocks that we missed the boat on, but including me, I missed it. And I just want to bring that up. Maybe we should do a little focus there because I think AI is going to have problems over the next, the rest of this year, I think, because there's a lot of questions. And if Dennis's stock doesn't blow it out of the water tonight, I think we're going to see the air come out. And I'm expecting that NVIDIA will do okay, but will it be a blowout? I think there's a lot of holdback and everything going on with these data centers as to what I'm reading. It's hard to confirm these things, but it seems to be an issue out there. But flipping the tide, energy is doing great. Defense is doing it. Industrials is doing phenomenal, but industrials has issues. If it's not for those data centers, it's dead. So that could deflate too, just because I'm in it and I see it.
But
anyway,
they're all flattening out. They're all flattening out until today. We'll see what happens, Bob.
Yeah, exactly. So anyway, I just wanted to put that on the table, which should be something we look at and focus on, because otherwise you're going to miss the bigger boat as that grows. There's a lot of investment going on there.
Okay. Yeah, I'll put it on my list of things to check out. For sure.
And don't forget about Blue Origin.
Blue Origin. Okay.
Yeah, Bezos gig.
Yeah.
I don't think that's publicly traded.
Yeah, I don't think so either. But you have all the companies that are supplying them, right? That's what we need to look at.
About a month ago, I started digging into who, because of SpaceX possibly going public, into what companies provide products or services to them. They pretty much manufacture everything in-house. And it was a very limited amount of companies, and a lot of them were private companies that are providers to SpaceX. So I'm curious to look at what Blue Origin has to, who their suppliers are as well. So something, I know SpaceX is pretty, self-sufficient when it comes to who they're buying products from and services and that kind of thing. So, but I do agree. It's the space is the next potential level of where we're headed.
I think it's the final frontier.
I think it is. I think that was
I'm gonna throw at you. I'm gonna throw at you. I disagree with you. They don't manufacture all their parts. Parts go through specific manufacturers that are out there, and a lot of these companies are privately owned companies, right? Because I deal with them. So I just, I think that I saw that there are several public companies that are dealing with Elon and with Blue Origin. So there's just some work has to get done there. I'm going to try and do some myself, but I just want to bring it to your attention. All right.
I think it's a good idea. Thanks, Bob. When are you headed to Florida?
Mid-March.
He wants to get the full effect of winter before he leaves.
Yeah, I just want to get whacked. It snowed here again this morning. It was not a lot, but it snowed again. This is, what else you gonna throw at us? Keep
Right.
it coming.
You
Yeah.
can
But
have it, Bob.
All right.
yeah, I went out, and I don't want to go down there now because we got the TPC golf thing heading in there, and it gets crazy. You
Yeah.
get like 100,000 people in there into my neighborhood that are renting houses and places for the TPC playoffs, and it just gets crazy, and I avoid that.
Yeah. Well, we'll see you hopefully soon
All
in
right,
the warm
talk to you
weather.
later.
All right, man. Hey,
Take care.
so
Bye.
I want to. Zeke's had his hand up for a little bit. I want to let Zeke ask his question. I want to hit upon something that the stock analyzer put out about a NVIDIA. And then I want to give Dennis the floor because he wants to talk about some research he's done on the banking system. So, Zeke, what you got?
Well, I have more than one question. Let's start off with one of them, and I don't want to jump in here and put
Fire
every
away.
put everything else on a backlog. Three of them are kind of administrative sort of things. Somewhere on the Best of Us website, I looked and I thought, oh, gee, there's my Discord password. I have not been able to get back to that, and I'd like to be able to because for some reason when I go to the Discord, it just loads up. The password is not in my computer because I looked. Why do I want to do all this? Because I want to put the Discord on my phone. So I don't know where.
Okay.
That's one question. The next question is, or it's not a question, it's a remark. There's a little bit of an inconsistency on Kerry's portfolio on the BMA and in the Discord. Not much, but he bought some UPST shares sometime in the last 3 or 4 days, and that's not showing up on the in his
On his portfolio.
yeah, it is showing up in his portfolio if you uh, go to the old version of his portfolio, but not in the BMA.
Okay. That's a link issue. I'll check that out. Thank you.
Yeah, I figured it was. It's I don't lose sleep over this stuff, but over a period of time, people rely on this
Yeah.
information, that kind of thing. Okay, we'll get down to the third one is actually Mark. I wanted him to have a look at SLV. I think I know what he's going to say, but I'm not going to guess at it. So I'd like him to comment on that. The last one is, let me see, have I got
Did you say FLDF?
SLV, silver.
Oh, SLV.
Okay, and the last one is a bit of a request, but let me say something before I make that request. Let's see. I started back in here in roughly the 1st of January, and before that, I was not invested at all. I started to invest last Tuesday, so that now works out to be what does it? Let's see. 1, 2, 3, 4, actually 6 trading days, and my portfolio is up 4.5%. So I'm certainly not, I'm getting my money's worth by being part of this crowd and some. But having said that, I know nothing about cryptocurrency. And it's not because I haven't tried. Yeah, well, it's part of my personality. As a kid, I was never interested in anything I couldn't touch, hear, or see. So that left out cartoons, and that left out science fiction, and so on. So I'm asking if we can have some sort of a where does
Conversation.
where can I mine cryptocurrency in my backyard? No, obviously I can't. I've got that much figured out, but that's about as far as I am on that. So I guess that covers everything. Yeah, the cryptocurrency thing, well, it's it's moving in that direction, and I know enough about it that it's going to be the currency uh, uh, sometime
Some
soon.
version of it. Yeah.
Yeah, and so I need to know about it, and I'll certainly keep trying myself, but I need some help on that, and I really think that a lot of the members here do. Maybe they're just sitting in the bushes and not saying anything, but and of course that all goes back to the mantra which I came here, and that was Kerry's, if you don't know why you own it, you shouldn't own it. That's why I don't own it, but I do want to know why.
Okay.
Okay, SLV, Mark.
You want me to do that right now, Trent?
Yeah. Do it real
Okay.
quick.
SLV, silver. This is my silver chart. You can see we had that nice run up all the way up.
Hold on. Let me get out.
Oh, sorry.
All right. There you go.
Am I in?
Yeah.
Okay.
I can see it.
Okay, good. All the way up to what did we get to on this one? 105.57 and then drop. Okay, as big old candle drop. Went back into this box. We started working our way up, and here we are hitting this resistance level, Zeke at 80.72. If we can get above that and get some confirmation, like here we got above it, came back for confirmation and rolled up. We can do that again. Our next level is going to be around 90.50 at this level here for some resistance. And then our final level will be up here. But you see, we had this topping tail here, which usually tells us that the streak is over, and did another day, and then it was over. So again, so you got 80.72, and then you've got 90.51 on the upside, but we got to get above it, retest it, and see if we can go any further on that. Of course, there's a lot of other stuff going on in silver and gold, with the COMEX and all the things we've talked about. But again, silver in charts, and you get up to a point, and then the steam runs out, and the charts tell you to get out, and you get out. And it's not that meaning that there's, the problems in silver and gold haven't been fixed. It just means that momentum dried out on this parametric move, and now we get a second chance at it. Right now, I'm going to do one more real quick because it was in there. Bloom Energy. Here you got Bloom Energies. You had a nice run up right to resistance here. Then we popped up, and here we are in resistance again. So we've hit here twice. We've hit here again. We can't get past that. There again, here's something of a tail, another tail up. So we need to get past that level at this point, which is 169.13. Retest that if we're going to go any higher. Otherwise, I see it coming back down to maybe 149 on Bloom Energy. Okay, sorry.
Okay, I'm just going to hit on this real quick. This is on NVIDIA. You can go to the new panel or behavioral market agent. It's in the website. It's the first thing on the platinum menu when you log in, or you can access it. Well, actually, you're going to go through the website. It looks like next week we'll have, I believe, a new website. So this will be integrated into it. So it'll be really easy to get to. But I wanted to hit upon NVIDIA, the stock analyzer, which is under research here. You can do the stock analyzer or the scorecard. The scorecard is very quantitative driven. The stock analyzer is looking at the systematic algo driven market, which according to Google Gemini represents 60 to 75% of volume every day. So that's a lot of volume that algorithmic trading represents. And so I wanted to screen down here. I posted this report and a scorecard report of NVIDIA on the Discord in my office, so you can get it there. But one thing it points out is, let's see, where is it? It updated on me. Shoot. The biggest challenge we have as individual investors is systematic trading. And the thing we need to be aware of is that systematic trading is based on an algorithm, and algorithms are written from a if then statement. So if this happens, then we do this. If this happens, then we do that. So when you're looking at 60 to 75% of daily trading is based on algorithm trading, that can be a bit dangerous. So for instance here, the high algo score, 80 out of 100, and high conviction signals indication systematic buying flow is active. This creates a self-reinforcing cycle. Algos buy because price is rising, which attracts retail, which justifies more algo buys. The sub one-time volume ratio reveals that the recent price action is driven by fewer incremental shares, a classic sign of the herd is crowded. If you follow the contrarian point of approach to investing, when you see this herd crowding statement, typically the institutions are going to go another way. So if the VIX spikes above 22 or equity funds force redemptions, this momentum support, it will evaporate rapidly, which watch for capitulation style volume. So with this kind of market that is systematic, investment funds are driving the majority of daily volume. As we come into tonight's earnings report, it could be the slightest misstep in their guidance, their wording, that could trigger a buy and a move through 200, which in this report gives you, if it does go over 200 and you see sizable volume increase, chances are we're going higher, but it can go the opposite way. And I think this is when I look at a pattern of NVIDIA, and its pattern since what, July, August. Yeah. What that is telling me is there is a lot of focus on tonight's earnings report. And when I look at where we are in the phase side of things, this is my macro data sequentizer, and basically where we're at economically, we're in phase, have moved from phase 2, which is late expansion. That's where you get that tail up that we saw from, say, April of last year till November primarily in the Mag 7s. Now we're transitioning to a phase 4, which is a recessionary type of environment. Treasuries, gold, utilities, and defensives have done well. Throw in energy in that whole thing, and that's what's performing right now in this market. And so as we go into second quarter, or the last month of the first quarter, second quarter, we are seeing a shift. So when I look at what NVIDIA's earnings represent, they can blow it out of the water. But if the economics aren't there to support it and the money flow isn't there to support it, it going higher is going to be a challenge. So I'm really interested to see how the market is going to react today to NVIDIA's earnings report, plus its after its conference call as well. So keep an eye on that. Honestly, I think we're entering a risk off. We are in a risk off environment, and that would be something I would definitely take into account right now at this point. And if your question is, how do I get to this macro data sequentizer, you can't, because I haven't put it up yet, because I want to get more like the UK, Europe, Japan.
Your chart isn't up. It's just a picture of you. Oh, that's a picture of me.
It is?
No, I got it. Okay, now you're back.
Okay. So anyway.
They say you look Italian because you're talking with your hands.
Am I?
Yeah.
All right. So that's what I got there. Just be cautious as we go. Why are you showing up?
I don't know. That's a you or two.
Both are on. There's
There
no
we go.
charts. There you go.
Somebody jumped on. So anyway, that's what I got from NVIDIA's standpoint. I just am in a very cautionary mindset right now, very protective. And I think today is the pivot point, especially not particular today, but tonight with NVIDIA's earnings. I think this could be one or two, it could be one or the other catalyst that moves this market higher, and probably still in a very narrow group of companies, or it can move it lower. So when I look at, Mark put up a chart of P&G, Procter & Gamble, and I see the move since January versus NVIDIA, it tells me money's moving somewhere else. So be careful. We'll go from there. All right, Dennis, you there?
Everybody can hear me?
Yeah.
Good.
Awesome. Which one do you want me to put up first?
We're going to go to the Excel, please. Do you want me to comment on NVIDIA since it's been half the morning?
We have so much time. So tomorrow,
All
let's
right,
do it
let's go
tomorrow.
to the bank.
Let's do it tomorrow, Dennis, when you can give us your thoughts after earnings.
Okay, let's go with the banking presentation Excel. Explanation. I like to invest. I'm a math and stat guy, and I like numbers behind my methodology. I started to call this the FBI and 5 banking investables, but that wasn't comprehensive enough for what I wanted to do. So I just changed 5 to fine. There are 2 banks, Bank of America and Regions, which I've omitted from this list because they're 100% non-investable for me. And remember, I didn't do this so that you can see my philosophy. I did it so that the group has some analytical data behind any investment you might make in the banking sector. And for all clarification, I very, very rarely have ever been in this. I've had a little tiny nibble with JP Morgan. I've had a little tiny nibble with Goldman Sachs, but I'm talking about I was never in either for 6 months. So to me, I'm a zero banking person. But I started to do some research, and you can see the banks there. Hopefully you can see the tickers and the very description, archetype, talking about the type of bank. And they're on there for a reason. I wanted them to look at it from an investable standpoint. Do I want to put my money, which I'm very tight with, behind any of these banks and take a conviction position? So Morgan, Wells Fargo, Goldman Sachs, there's SoFi, which is now a full bank. And there's a company called Truist, they're kind of quasi-national. They're like a large regional. So there's a pretty good disparity between the real big and the medium-sized banks. You can see the columns. What I wanted to point out briefly is the Bank of New York Mellon, which is BK as a ticker symbol, is a little bit different. They're more custodial, fee-driven. They're not as much rate-driven. They're kind of the plumber of the ecosystem of banking. BK is kind of the ballast. And as I went through, I said, okay, we've got price earnings. We've got a generic description. All of this data came from AI. Otherwise, it would take me, a week. But I went through, I did numerical PE, that's price to earnings ratio. If you looked a little further, I added the compound annual growth rate. And banks traditionally, good banks, 13s, 14s, 16s, you'll see some of those. But in green, those are all, that means for the last 3 years, the compound annual growth rate is greater than or equal to 20%. And I think they're all 25. Well, one's a little less, but all of them are greater than 20. The only one that didn't have that kind of CAGR is Truist Financial. And then I looked at the return on investment, return on equity, I should say, turned it into a numeric number, strong and strength. And as I said, I'm a math stat guy. I like numbers rather than verbiage, but I've got both there for you. And the one that says strengthening is Wells Fargo. Nothing jumps out at you, but the total return, what do you expect, Mr. AI, for the next 2026, 2027, 2020, and an approximate average per year? And if you look at that, you'll see that SoFi would be by far the Griggs upside, but SoFi is also very risky. The one thing SoFi has is a tremendous reputation in the secondary market. They sell their mortgages and they almost never have a default. They're all, I don't know, 97 or 98% or something, which I had some time in the mortgage business. That's pretty remarkable, but they're so good. They actually get a premium when they resell on the secondary market. So now we're getting to the big columns. The risk, low, moderate, high. The highs are in the bottom. What AI determines as a reasonable allocation per bank. And you can see there 20 to 25 for the top couple, which includes JP Morgan. Then I asked AI, okay, I can come up with my own rating. You come up with a composite score, which it did, and that's how I ranked them. Anybody can pick any bank. There's a lot of range. There's actually pretty good CAGRs for everything. But I chose, and again, I did this mentally for a while. I chose BK, which is Bank of New York Mellon. And Bank of New York Mellon is that opposite bank. It does, it's fee driven. It's a fantastic balance sheet. It's more of the stalwart. And in addition to that, I wanted some exposure to high upside, which is SoFi, which again, you'll see is kind of below the mean here. And the reason I like SoFi is I think SoFi's CEO and NVIDIA's CEO, which I'm so high on, are very much alike. They're not driven just to be mediocre. They want to be the best that they can be every single day. And their companies reflect that. I think SoFi is way underrated. But in terms of my percentage, about 90% is in BNY, about 10% in SoFi, and nothing in the others. Now, of course, they could be in mutual funds, but I'm talking specifically in individual stocks. And Morgan would probably be the next one if I diversify, but I really like everything I'm doing with Bank of America Mellon. The CEO came from Goldman Sachs and has a completely different attitude. If you see the CAGR in column F, 33% over the last 3 years. That's per year. That's kind of unheard of in banking unless there's arbitrage and blah, 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 blah. But this guy came from Goldman and he doesn't want to go out there and be 12% and 14%. Now, do I expect a 30% CAGR the next couple of years? No, I don't. But I think it's going to be solid 12s and 13s and on good year, maybe 16s. And that's kind of a balance and a ballast to our other higher conviction, higher risk assets. But I think we can get the steadiness. So we have multiple accounts, as many of you do, and I want the one that's going to give me a steady return to go beyond. We have a large cash balance, and it's there for opportunities and to be deployed. So I'm looking at BK especially. For me, it's an opportunity to increase my money market yield and still keep things very, very liquid and we'll call them quasi-safe. Will it drag down my overall return? Yes, but not significantly. But it could actually help because I'm deploying cash at 3.51% and hoping to get, even if I get 12, I'm still gaining, 8, 9, 10 points above what it's doing in pure cash. So it's now a legitimate position in our portfolio. And I did, as I said, I did most of this mentally, and then I went back and I put it to a table so that everybody has a chance to look at it and take advantage. If you're interested,
I'll create a PDF of it and put it up on the Discord under deep dives later today. I'll do that for you. Question for you, Dennis.
Sure.
Something maybe to consider is what is the credit quality of their loan book?
Well,
if you can figure that out, I don't know.
The credit quality of the loan book isn't something I looked at except for SoFi because of my higher interest. Trent, you're exactly right. For people that have loans and have risk, the rates are edging towards 6.0 on a 30-year. I think it was 6.12 last I looked. There is a credit risk, But the one that stands out is SoFi. They are the least credit risky because they're so discriminating when it comes to borrowing. I was actually a loan officer for a while, and I was in this world. The ability to resell mortgages is really big.
I guess
again,
what I'm looking at, and I saw this yesterday, was credit card 90-day default or delinquency rates are like second highest ever. And so when I look at that, maybe SoFi doesn't offer a credit card, but I know JP Morgan Chase does, and Wells Fargo does as well. And Goldman Sachs actually just got out of that business with the Apple Card. They sold that off to JP Morgan, I believe.
Exactly.
So that would be one of the things I would be considering, because, and here's the other element maybe to consider as well. The last 3 years, we had an increase in the Fed funds rate. Well, that creates a bigger spread for those lending institutions. Now we're in an environment where they're lowering Fed funds rates. That squeezes margins. So I guess if there was a way to forecast that into this 3-year, the CAGR 3-year forecast out, how would that affect some of these? And I think that, that would be like that continuing analysis along with credit quality of their loan books or their credit card.
If what you're saying, Trent, is very viable for most of these banks.
Yeah.
There are 3 up there that I would never put a dime in. But I took Regions out. I took out Bank of America. And there's another one that I would never invest in called Wells Fargo, which is WFC. There's some, I'm going to call them ethical discrepancies that I am very, very anti. And when banks do that, and in Wells Fargo's case, they've done it multiple times, I wouldn't touch it with a 10-foot pole. It's only in there because it's such a large part of the banking community. But as far as the credit, there's 2 aspects of this. There's the mortgage security, which is what I was talking about SoFi. The credit card part is a huge problem. I mean, that's an enormous one. Now, should I go back in and look at that and see if we can quantify that? Maybe. That's an adjunct or a phase 2, I'll call it. Right now, I'm not as concerned about it, but it's going to affect margins as the defaults and the greater than 90s for home mortgages have come to light. Again, to me, SoFi is the stalwart in that. And Bank of America is very much, that's not really their forte. They're not in that as much as some of these other places. Fifth Third's had some very questionable practices. And so when they start at the edge of integrity, I'll call it, they're out for me. So I'm like Mark Cuban, right?
Right. What you mentioned, you didn't put Regions on here, and I'm asking because I bank at Regions and have since the AM South days in the 80s. What was the no-go signal on them?
The Regions, I actually have the data because I did it on another sheet, but the CAGR was well below 10.
Okay.
And the return on equity was well under 10. So for me, that was non-investable. And I thought maybe a more representative bank would be Truist. But again, you see Truist is pretty much the same. Regions, there's nothing wrong with it. It's just, I don't know of any ethical issues with them. But for me, Regions is not under consideration. And I didn't want to put, another $10 bank and blah, 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 blah. So I tried to get a representative list of banks that I thought people would be interested in, other than Bank of America, which was way below investable for me. So, I mean, I can expand it certainly or modify it, but the credit riskiness, I'm talking about credit cards even more than mortgages right now, is really, I mean, how are people, I don't know if people understand, but many of the folks on this show should probably understand the rule of 72s. If a bank is charging 16, 17, I mean, 12% was kind of the old, my days. Mark, I think you're back there a little bit with me. 12%, 13%, that was getting heavy. Now you've got 18s. I think somebody has 21. I mean, there's no way these people are going to ever pay that off. So the credit card risk is a real big one. But again,
I would argue credit card balance or interest rates are over 30% on average.
Well, that shows you how out of date I am. I don't use them, but
it's insane.
Yeah.
And you're right. You can't pay them off unless you really snowball that really hardcore.
I mean, if people are paying 28 and 30 and 35, they might as well go out and change professions, create some income or something, because that's darn right. I mean, nobody's going to get ahead paying 30%. You can't get ahead paying 18%.
But those high interest rates are the insurance policy to pay off if they don't. Right.
That's true, Bob. But
covers their risk.
That's right.
It helps cover their risk. But if person after person after person is indebted, and to Bob's point earlier, and those people are going to go out there and they don't have jobs anymore, I'm very concerned about the job situation because I was one looking forward to AI. I use it daily. I use it to help peruse documents and poetry that I write and things like that. But I'll tell you what, it's so fast and so powerful. The quote, white collar jobs are going to disappear like flies. So here's a
challenge of it. When you run out of tokens, which I had to renew my Claude code, the amount of tokens I had, it's the second time I've done it in 3 days. They're going to make money on this. And that may be that transition of how do these guys make money? Well, if you're programming everything in Anthropic, they're nailing you for constantly.
Yeah, all of that is true. But I hope that if anybody's considering the banking sector, that this aids your analysis. As I said, I'm a math stat guy. Mark likes charts, which I like too, but I'm a numbers person and I want to put things and quantify them. But in addition, by adding the verbiage like strengthening, variable, improving, I thought for some people that just want kind of a generic description, that might help them too.
But don't you think, Dennis, that banks are at risk right now? I mean, my feeling is that even the best of them, which would be, in my opinion, JP Morgan Chase, they all have a significant amount of risk in the markets right now due to job losses, due to the down economy that they all say is great and phenomenal. GDP is 5.2, which turned around to be 1.4. The list goes on, right? So my feeling is that there's a very high risk of loans not being paid back and failing. That is what you're talking about, right?
And I think Bob,
my position is stay away from the banks right now until we see what happens with the economy, because the economy really feels like 2008, 2006, 7, 8, 9, and it took from 2006 when it started to finally break down in 2009, right?
I would agree with you, Bob.
Right?
I think I look at private credit and what's happening in private credit that could spill over into the banking system very easily.
Right, and it's the ignition. When does the real ignition come, and the explosion? That's my take on it. I'm not. This is great, Dennis. But
Definitely.
I just think that to me,
a lot of risk.
there are other sectors that I can make money in, that I feel more comfortable.
And Bob, that's fine. My point or my purpose was I wanted to move some money into this sector, and I thought maybe this will help the group if they want to participate. You're certainly welcome to
don't get me wrong, Dennis. Don't get me wrong. I agree with you. I'm just a sit and wait on banks right now, and I think that if I was put money in, I feel it's SoFi because they're sending out to all these people who are heavily in debt and trying to bundle up their debt
into one monthly payment. But the problem is that they bundle it up and then they take those credit cards and they start charging on the credit cards again, right? Isn't
It is the risk.
that's natural? That's natural human behavior, and you can't control human behavior, right?
Yeah. I think
I'm sorry.
no, go ahead, Dennis.
I'm just going to say that the Bank of New York Mellon, because it's a differentiator, that's where 90% of my banking sector money is tied up. If I were going to diversify, I would just add more SoFi most likely. But then JP Morgan, as far as the stalwarts, they'd probably be my second, just like the composite score did here. But I expect, here's one of the things I wanted to point out. If you looked at the total return forecast for BK, Bank of New York Mellon, you're going to see 9%ish. Well, 9% is very accurate or maybe a little conservative long term. But since they changed CEOs, the guy came from Goldman Sachs, he's been running 33 to 35 per year. He's not complacent. And if anybody is going to pivot from the traditional long, gigantic banks, I think it's going to be BK. I could be wrong, but I think
You
Robin
want to
Vince
come
is,
and talk about that whole thing with the vault and everything?
Yeah,
Okay.
keep talking to somebody else. I think, I guess my question you on BK, not to run this too long, but BK, you said custodial high fee heavy.
Yeah, which comes to
What
my
are they
office,
charging?
please.
What are they
Yeah, give me a
charging
minute.
fees
I'm
in?
really curly with something. I'll be right there.
What are they charging fees in? Like
they're-
where are they doing that?
they do this outside the main. Let's see if I get a better description in the Word document. Stability earnings, anchors of the FBI. Well, they're still getting fees, but I think theirs are more custodial fees. Oh, there it is. There it is. Custody fee heavy capital. Yeah, theirs is more custodial. They're not doing some of the banking as big a part of the traditional bank as all the banks. They try to do a lot more custodial work. So it's a little more steady, a little more smoothed out, Bob, if I can use that word.
Okay.
But anyway, if we want to follow up, or if you want more, we can. But I wanted to present this so you, the group, has an opportunity to think about banking.
Yeah.
And if it's not investable for you, that's fine.
I think here's one thing, Dennis. Thank you very much for putting this out there. This reminds me of what I envision in the future, and that is departments of research, or research departments. And this is an example of somebody who took some time to start digging into a different sector versus the NVIDIA sector. So I think this is great. And I think the back and forth and discussion of why not, but also like I look at this analysis and now I'm curious, what is the credit quality of these guys' credit card? What's the delinquency rates on their credit card offerings? What's the credit quality of their loan books? Those kind of things. And I think that just you bringing this to the table, Dennis, I think brings great opportunity to expand research, but also provide some really unbiased opinions and approaches to this. And that's what I've always had for envisioned for Best of U.S. Investors. So I really appreciate you doing the work. It looks good. So makes me think.
Yeah, I just hope it helps people make decisions. I think I said it earlier, Mark's great when he sees a chart either to take action or inaction. And I am that way, but even more so with numbers. I want to put a numerical value on everything, which of course I do with NVIDIA all the time. But, that's just the way I work. And is it perfect? No, of course, but I deal in probabilities. If I've got a greater percentage chance of making money by being a little bit different, in this case BK, then I have to weigh that probability with the downside. And that's why SoFi has 10% of the banking dollars. But I think that's probably going to increase a little bit, especially if we get a dip.
So just I know Zeke's got a question, then we got to drop off here.
Okay, guys.
Process wise, here's how I think about this. What phase are we in? Does banking fit in that phase? Right now, no. We're in phase 4. It's not banking. But once we hit maybe phase 1 or phase 2, banking will. So now I go to the fundamental research that Dennis just did, and I go, who's my top 2, say here? BK and SoFi. Okay, and then I go to my charts and I go, what is the market? What's the charts telling me? What are the intermediate to long-term perspective on it? So it's a three bucket approach from my perspective. And that's really, in my opinion, that's how you build a process. And in mine is, what phase are we in economically? Are we in spring and summer, or are we winter, fall and winter? And then line up the companies that do well or the sectors that do well in those phases. And then I look at the charts and see what happens, see what goes from there. And then rotate when the seasons rotate. All right, Zeke.
I got another meeting. Thanks, everybody.
Thank you, Dennis.
Yeah,
Appreciate your help.
Bye, Bob.
Yeah, real quick, Trent, I was looking for your comment on my request earlier. You know, I dislike bringing these things up on an open forum because it's kind of like I'm trying to pin you to the wall. I'm not. Like I said in my ramblings on before that, I'm certainly getting my my worths out of this best of us investors. But the reason why I want to know, I would like some kind of reply, because I think in April we're coming up to a critical event as far as cryptocurrency is concerned, and I need to start schooling myself one way or the other.
Yeah. So you can't really see it, but I wrote down your 3 requests. One, the Discord password. I will look into that and I'll post that up on the Discord, how to figure that out. Because I'm not a Discord expert. I'm just trying to make it move forward. Kerry's portfolio update, I got that. I'm going to check out the link on the BMA. And then your request on maybe a white paper on crypto, like soup to nuts kind of thing to start out that conversation.
In my particular case, some sort of a 5-minute presentation on where is crypto found. I look at my backyard, there's none out there. And so where is it? How is it mined? How do you create something from nothing?
Okay. Yep.
However you choose to present that.
Okay. Yeah, I can work on putting something together. It's not gonna happen tomorrow.
No.
But next week I can see what I can happen.
Come on, Trent.
I think I've got till the end of April, I think, when the event is going to happen.
Is there a halving?
Well, I think that the legalities or something of it. I'm not.
He's talking about the Clarity Act, I believe.
That's it. Yeah.
Okay. All right. Yeah, I'll work on it and see what I can put together for you. Because it is a big, I think blockchain in general is going to be is becoming a bigger part of the world, and artificial intelligence. We're definitely seeing that show up here every day. So, but yeah, I'll put something together.
All right.
Cool.
Thank you.
All right. Well, let's wrap it up there. Mark, do you got any final words or anything as we approach?
No, I'm exhausted. Thanks for everybody who's contributing and asking questions, and we'll continue on. It'd be an exciting day tomorrow. So probably do a lot of focus on NVIDIA and what its effects on the markets from my point of view is going to be. So it's going to be busy tomorrow. So make sure you don't miss it.
Yeah. And we'll be back here 7:30 Central, 8:30 Eastern. I do not know what that is Pacific time, but I think that's 5:30 Pacific. 2 hours. I think they're 2 hours behind Central time. 3 hours Eastern.
You got Mountain and Pacific after that. Yep.
Yeah. All right. We will see you all tomorrow. Check out the Discord. I'm going to try to jump in after 3 o'clock as the earnings reports come out on NVIDIA and the whatever conversation they have after. So I'm going to try to jump in on the live and hopefully see you there. Have a great morning. Always live loud. Peace. See ya.
You busy living.
See you later, Mark.
Bye,
Take
Miguel.
care.
See ya.
And